Welcome, everybody, to the Market Update Desk with Scott Riley, NMLS 157524. We are at the end of July, hard to think, July 31st. This year is going at breakneck speed, it seems like. We did see on the sports front today, the Tigers pulled Casey Mize from his start. Yesterday, they called up Max Clark. That's pretty much foretelling that Scooble's going to be gone, Mize is going to be gone, Torres, and maybe a couple other players. Looks like a little bit of a reset for the Tigers coming. In the market today, I want to go over what's happening and what to expect for next week because that'll be very busy also. So we got some comments today from a couple of the Fed members that dissented on Wednesday's announcement of keeping rates paused. Specifically, Cleveland Fed President Beth Hammack and Minnesota President Neil Kashkari released statements going into why they dissented from the decision. They were in favor of a quarter point or 25 basis point increase at the last meeting on Wednesday. Hammack explained that she believes inflation remained too high for too long and is not confident that the Fed will get to its own target of 2%. She is seeing inflation coming in from supply side factors such as energy prices, but also from demand, suggesting that consumers continue to spend. But she does, however, acknowledge that people are struggling financially, which raises questions about what the strength of the consumer demand really is outside of a small K-shaped sector, what they're seeing. Hammack also described the labor markets are stable, which is interesting because we have been seeing the data show signs of cooling. Specifically, we've seen the ADP weekly and monthly reports become weak even since May and June. And the latest BLS jobs report only showed 57,000 jobs, which is very cool. So she's implying something that the data really isn't indicating. Kashkari said that he's seeing inflation come from a series of supply shocks, like the war in Ukraine, trade wars, and conflict in the Middle East. He also indicated that while the Fed should look through those supply shocks, there's a risk of inflation becoming entrenched within the market. And he felt that a strategy of small policy steps, plural, not singular steps, would allow the FOMC to slow or pause subsequent adjustments without unnecessary impact or shock on the total real economy. So he's talking about a series of steps, not a singular one there. Very interesting. On the flip side, we saw the Dell's Fed trimmed mean inflation report come out today. This is a report that uses the PCE data, but it removes the top 31 and the bottom 24% of inflation measures. And it showed that underlying annual inflation is running at 2.2% in June. That's a pretty cool number. This is down from 2.4%, so 0.2 decline from May, and shows that when you remove the outliers of shocks on low and the top, the bulk of inflation out there is very well behaved. And we've seen that when you take out shelter costs and portfolio demand or portfolio costs, we're seeing a lot else being very, very behaved. Now, also today we got the employment cost index, which was actually the old Fed chair, Alan Greenspan, who is generally described as one of the best Fed chairmen ever. It was his favorite measure of inflation. Now, that showed the overall index held steady at 0.9% in Q2. This was 1/10 above estimates and shows that we're not seeing strong wage pressure inflation. That's a very important data point that I think Chairman Warsh is going to start to have more focus on. Now, next week, we get the jobs report, so it's going to be a very busy week. We get JOLTS, we get ADP, jobless claims, job cuts, and the all-important but rarely correct BLS jobs report. In the market today, we're seeing the Dow up 244. 10-year Treasury is not looking good. We are now up to 4.73 on the 10-year yield. We're up 7 today. In fact, we just got a price alert for the worse about 20 minutes ago. Oil is up to 84.77. Brent crude up to 89.98. Going into a weekend, as we've seen over the last, 4 or 5 months, very volatile. So we're staying on top of activity and market actions over the weekend to help advise our clients. Give us a call. We'll walk you through all this data, help you get pre approved, and help you get the best deal. Have a fantastic weekend. 616-293-2189. The Market Update Desk, your original singular market news source for West Michigan.